Thank you for having us here today. And we are here to address the dilemma that the pension fund has faced and in order to align the board's conflicting interests. So back in 1980s, the codfish industry was the leading contributor to the province's GDP. However, the overfishing of the codfish industry led to its fall, and the Newfoundlanders face its repercussions. So the over-reliance of a single industry without environmental considerations is what sets the premise for the fund's dilemma today. So good evening, everyone. My name is Bernice Wan from X Capital, and together with my colleagues Arnold, Jonathan, and Ryan, we are here to present to you our solution in addressing the fund's dilemma. So to start off, we have to understand the root of the issue. We understand that there is a gap in opinions on how the fund should be invested. And we see that there are two opposing standpoints: environmentalism and economic benefit, pro-divestment and anti-divestment. So for the parties who are pro-divestment, they feel that they should divest in the oil and gas holdings such that they could prevent the exploitation of the environment, stop current protests, as well as show the fund's commitment towards sustainable investing. On the other hand, however, parties who are against divestment feel that they fear that the unemployment costs as well as the lower returns would outweigh the environmental benefits that come from divesting. Hence, we see that there are strong opposing tensions between the two sides, and therefore it is an imperative need for the board to be able to address the gap and resolve the conflicting interests of the stakeholders involved. Hence, to develop our optimal portfolio strategy, we identified three key considerations. Firstly, under the bracket of environmentalism, we were mindful of how our decision would impact the natural environment. And say, if we were to divest, would our buyers care about the ecological impact? And should the fund publicly display its commitment towards sustainable investing? Next, we also considered the economical implications of our strategy. So we were trying to think about how we could avoid the fear of the possible job loss, potential lawsuits, as well as the protests by the oil and gas union. And all in all, while still maintaining the board's fiduciary duties of a minimum target return of 7%, as well as continued investments in the local initiatives. Lastly, we also identified an over-reliance in the oil and gas sectors and investments in Canada. Hence, with these considerations, Ryan will now propose to you our proposed strategy.
Thank you, Bernice. So allow me to introduce to you our three-phase strategy to bridge the gap between economic as well as environmental concerns. So firstly, immediate impact. Our team proposes a portfolio optimization to cut the slack of the current indirect portfolio as well as issue a public statement. Secondly, seeking sustainability. Our group would like to have a discussion around the divestment of South White Rose. And lastly, our group proposes to the fund that we leave a lasting legacy on the local communities by investing in a local greenfield wind farm. So moving on to our first strategy, immediate impact. So our group has identified two key concerns with the current indirect portfolio. Firstly, the current returns are below the fund's mandate of 7%. And secondly, it's overly concentrated in Canadian assets. So moving on to... So our group has begun a journey of optimizing this portfolio, firstly, by expanding the investable universe. So we expanded the investable universe in terms of our bond portfolio as well as our equity portfolio, and we've also included assets such as infrastructure assets, ESG funds, as well as global impact funds such as healthcare and education funds. So all of these has allowed us to increase our expected returns to 7.13% above the fund's mandate. We've also improved our risk-adjusted return measure and reduced concentration risk in Canadian assets. So our proposed optimized portfolio, as shown in red over here, not only outperforms the current portfolio, but also outperforms the market portfolio. So we've also conducted a risk analysis, including a Monte Carlo analysis of over 1,000 iterations, and it has shown that a probability of a 5% drawdown is only 1.93%, below the current portfolio's 2.26%. We've also conducted a scenario analysis back-tested against global historic events such as the global financial crisis and the oil price drop of 2015. And we have identified that our portfolio is robust and is able to weather downturns more effectively than the current portfolio. So moving on to the next part of our immediate impact strategy, we recommend issuing a public statement so that we are able to signal to key stakeholders such as key activists as well as pensioners that we have heard their concerns and are in the process of addressing them.
Thank you, Ryan. Moving on to the second phase of our solution, seeking sustainability. With regards to the divestment decision, our team has identified 3 key recommendations that need to be addressed. We recommend a partial sell down of the sulfide rose stake in the 3 to 5 year horizon, as this would reduce the oil and gas concentration risk, address environmentalist concern, as well as facilitate a smooth transition towards a more sustainable portfolio. We have identified a list of possible buyers for this partial stake. Tier 1 buyers are strategics with an existing presence in the John Dark Basin. Tier 2 buyers are oil majors with the balance sheet capabilities to fund this acquisition. And Tier 3 buyers are financial sponsors with an investment mandate to invest in Canadian oil and gas assets. We recommend focusing on the Tier 1 buyers, as these companies have demonstrated a commitment to the environment have demonstrated a commitment to the environment. Flush with liquidity following our divestment, our team looked for an attractive sector to invest our returns in. As the different countries strive towards the Paris Agreement goals, we see renewables as being the next hot sector. The production costs of wind and solar energies have dropped by over 70% in the last decade, and renewables and solar and wind energy is set to become cheaper than nuclear and coal by 2023, even after excluding government tax credits and subsidies. Renewables are now in the money. Our team has identified a list of 6 large companies in the renewables developer and manufacturer value chain. These companies are market leaders and have a deep competitive moat. They are able to deliver consistently high return on investments over the long investment horizon that our fund has. Investing in a basket of these stocks would allow us to align with the fund's new direction towards long-term sustainable investing. I'll now pass time on to Jonathan to talk about the third phase of our solution.
All right, thank you, Arnold. So moving on to the third phase of our solution. To bridge the environmental gap and the economic gap, we have to consider investments with a double bottom line, strong cash flow generation, and also contribute to the economy and the community in Newfoundland. We believe that wind energy generation presents itself as a strong candidate with tremendous potential. There's a nationwide push for wind energy, with the Canadian National Wind Agency organization targeting a 510 increase in installed capacity every single year. Newfoundland stands out as a strong candidate because of its high average wind speeds compared to the other provinces in the country. There is also a trend of decreasing setup costs, which will help improve our returns and decrease setup risks. Last but not least, we are creating new green jobs for Newfoundlanders and also diversify the province's economic base. Beyond just a social and environmental bottom line, there is an economic case to be made for this as well. We built a model looking at comparable wind farms like Fermuse in St. Lawrence and estimate a return of 7.6% over the fund's life for a 50 megawatt wind farm. This can be improved to 11.5% if half of the project is funded via debt. We did a sensitivity analysis, and we see that the main contributor to investment returns is actually startup costs. A 5% decrease in startup costs will increase our investment returns to 8.2% from our existing 7.6%. This is in line with the trends of decreasing startup costs, which acts as a tailwind for our investment thesis. So moving a step back, we see that our investment proposals is both comprehensive and executable because we have short-term immediate impact strategies to address stakeholder concerns while we look for strategic partnerships and transition to a long-term sustainable investment strategy. Our strategy changes our fund compositions as seen in this slide. We have reduced our oil and gas exposure by 6%, increase our risk-adjusted returns by 1.2%, and have a focus on long-term sustainable investments. This is done by first optimizing our portfolio and increasing returns in preparation for the divestment of sulfide rose. After the divestment, the money is invested into renewable equities while we wait for an opportune time to relocate the money back into communities and invest in infrastructure such as wind farms. So this aligns the different interests of the board. The divestment actually allows us to fulfill our fiduciary duties because we're reducing concentration risk in a highly volatile oil and gas sector. We are also careful with our divestment by picking tier 1 buyers with a commitment to sustainable environmental preservation. This will also reduce the negative impacts on the Newfoundlanders' economy. Last but not least, we are responsible to our pensioners by achieving a higher target fund return and also investing the pension money into industries that generate an environmental and economic benefit. So ultimately, we believe that having our long-term strategy that focuses on double bottom line or even triple bottom line will help to bridge the gap between environmentalism as well as economic benefit. And with that, unlike the victims of the cod fishing industry, we believe that Newfoundlanders today we'll be able to enjoy a brighter and more sustainable tomorrow. Thank you.